everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Chief Johnson Chukwu, the Group Managing Director of Cowry Asset Management, is joining me. Chief Chukwu, you're the only one I call Chief on this show.
And Nancy, you've forgotten the fact that you are a high chief. You're only interested in my chief taste. You've forgotten that you are a high chief.
Oh, God, don't be smarting. Okay, welcome to the show. Welcome, Chief Chukwu. Where do we start from now? I think I will start by asking you, interpret to an average Nigerian where we are right now in our economic trajectory, because there's so much economic jargons up and down. Where are we right now in our economic trajectory, at least from what we've seen in the last few days or week, in just 45 seconds?
Nancy, that's a very difficult question, and the time limit is further constraining. What I would say is that the economy is going through a transition from a largely command and control economy where there was dominance of government or public sector to an economy that is supposedly to be driven by the private sector. We've seen the government pull back from subsidizing electricity. We see the government pull back from subsidizing fuel. We've seen the government allow the telco operators to reprice their tariffs. So these are indications of private sector-led economic orientation. I think that's what we will say. But in terms of standard of living of average citizens, we'll also see a transition where the standard of living of the country, citizens have actually worsened over time. And we're only hopeful and praying that that deterioration in standard of living will not bottom out, and then we should begin to see a recovery.
Now, you just came into what I wanted to ask. So you are really my brain. So the question would be, with what you're saying, is the economy back on track?
That's why I said we are hoping and praying, and mark those words. That they tell you in strategy that hope is not a strategy. We are hoping and praying, and prayer without work is dead, like we say in Christendom, that the deterioration in the standard of living of the average citizen will bottom out. How will it bottom out? If we begin to see a stronger economic growth rate, if we see a materially lower inflation figure, we see an increase in household income, those are factors that will drive that recovery that you alluded to. So it's questions are, do we have enough indicators? And clearly we know what to do, and I think it's not for lack of knowledge. We need to address the issue of high inflation rates. We saw inflation at the rate of 34.8% in December last year. Food inflation at about 39.84%. We need to bring down food inflation. To bring down food inflation, we need to address the issue of food production in the major food belts of the country. That is, address the issue of insecurity. If we do that, we're going to have a more stable food prices, and that is very key in addressing the standard of living of average citizens. The other factor we need to maintain a stable exchange rate and possible naira appreciation. We've seen some form of appreciation in the past couple of weeks, but we must bear in mind that the Chinese are on holidays, and therefore demand for FX has actually slowed down while supply has improved. So that will be tested when the market, the Chinese resume and importers start.
But they've resumed now. You're talking of the Lunar New Year?
Yes, so they just resumed. So
yes.
We expect importers to start placing their orders. So that will test the strength of naira. If you catch your mind back about this time last year, we saw naira appreciate about 1,100, a low of 1,900, and then eventually reversed. So we need to be sure that the central bank have the war chest to continue to support a likely increase in demand by importers. And that's the only way we can see a consistent naira appreciation.
Is the $39 billion in the FX reserves enough for that?
Nancy, that's a gross reserve.
Yes.
That included in that reserve is a lot of hot money. And when I mean hot money, last year, the federal government through the DMO and the central bank borrowed about 31.3 trillion naira by way of treasury bills, OMO auctions. And of that amount, about 25 trillion naira was treasury bills and OMO auctions. Those maturities will come early this year or sometime this year, because the longest tenor treasury bills you have is 364-day bills. So in effect, you are going to see either a sustained high interest rate environment to the short end of the fund market, that is treasury bills and OMO, or we may see a reversal of that capital flow. And bear in mind, we're also living in an era of a heightened geopolitical and global macroeconomic environment with the advent or the return of Mr. Donald Trump as the president of the US. There are too many balls in the air that one cannot sit down and say for sure this is how the global economy will perform and as to drive the direction of capital flow. There are things that America could do today. For instance, Donald Trump said he's going to reduce taxes across corporate taxes and the personal taxes. If he does that, the U.S. Budget deficit will expand. And if that happens, then you should expect the U.S. government to either issue more of borrow more from the public by issuing treasury bills, treasury bonds, and other federal government, U.S. federal government debt instruments. That will trigger an increase in interest rates and will lead to flight to safety, investors going back to buy U.S. treasury instruments, and that will see ordinarily lead to capital flow from emerging economies to more advanced economies, particularly U.S. And those are factors that are all day in the air. Like I said, too many balls are in the air. But the key thing we are talking of, how do we ensure that standard of living of Nigerians keep improving? I need to mention this factor, that for us to have a more stable exchange rate, it is not a silver bullet, but the shortest route to have that is to increase crude production. The government has budgeted about 2.06 million barrels a day crude production, which we know is overly optimistic. But let's even assume we're able to increase crude production materially beyond the 1.5 million barrels average. Then we should be able to generate additional cash flow from our operating activities as a country to help stabilize the exchange rate. Stabilizing the exchange rate and increasing food production are absolutely necessary for us to begin to see a consistent improvement in the standard of living of Nigerians.
Okay, Chief Chukwu, let's talk about, because you were talking about the economy, and what came to my mind is the CBN PMI that they released, saying that, of course, confidence increased in January, Purchasing Managers Index, 50.2%, indicating economic expansion. How would you interpret that data against the backdrop of what you've been talking about, against the backdrop of the declining purchasing power of Nigerians?
Well, if you talk of Purchasing Managers Index, you're talking of the confidence that purchasing managers have to buy raw materials and other input materials for production. With this, the confidence is that they have expectation that there will be improvement in demand. So they are buying raw materials to produce more goods with expectation that there will be improvement in demand. So that's what you call Purchasing Managers Index. Of course, it varies from month to month, so it depends on how people feel. But bear in mind that we are coming from a Christmas season, a Yuletide season, where there is heightened demand. So having an increase in Purchasing Managers in the index in January, where purchasing managers are buying raw materials to reproduce and restock, could actually mean that they are restocking their depleted warehouses or stores based on the Christmas sales. So let's watch the Purchasing Managers Index consistently for the next months before we take. But bear in mind also that the manufacturing sector, the last reported GDP figure, which is the third quarter of last year, the manufacturing sector only grew by 0.9%, which is barely 1%, less than 1%. So that will also show you, is that sector really growing and what are the constraining factors? But let's hope the PMI that we saw in January will be maintained consistently. So we're going to see, because for it to maintain, they have to produce, and those things they produce have to be sold. And then
which
they have
is
to have
dependent also on the purchasing power, the spending power of Nigerians, as it were. Because whatever the companies produce, we should be able to buy.
Yes, absolutely. And when you talk of purchasing power of Nigerians, It has to do with inflation figure. It has to do with increase in income or earnings. I know the government, most government must have implemented a 70,000 naira minimum wage. I believe most of the state government would have done that. So that puts some cash, additional cash, in the hands of average consumer. I understand for even youth corpers, their allowance, monthly allowance is going to be about 77,000 naira. So if you have an increase across board in the remuneration of public employees and private sector employees based on the new minimum wage, then you should expect some improvement in consumption, particularly consumption of basic items. But you also have to pray, and like I keep saying, prayer is not a strategy, that inflation rates reduces below the rate of increase in household income. And that's when you're going to have an improvement in the purchasing power of average households. If inflation rate is still above the rate of increase in household income, then the capacity of households to consume will continue to be depleted.
So how do we get out of our stagflationary mode? And let me also link it to the misery that we are facing as Nigerians. The misery index continues to be high. How do we get out of that mode? Because even what we are suffering as Nigerians, stagflation, forget that the unemployment rate is 4.3%. And I'm assuming that, I don't know what the MBS is thinking, that it hasn't brought out its GDP and CPI revised numbers. Let them not bring out the kind we saw with the unemployment numbers. So how do we now, the trade-offs of these economic reforms has intensified, added more pressure to inflation. So how do we juxtapose all of that? Stagflation and misery. Nigerians are miserable.
Well, when you talk of misery index, you're talking of unemployment, you're talking of inflation rate. I think I've been dwelling on inflation rate, which I said we need to improve food production and reduce the food inflation from about 38.4%, 39.84%. And we need to address that. We need to have a more stable exchange rate that will help us bring down all item inflation from about 34.8% we had in December. So the other aspect of the misery index equation is unemployment. One, I think I've spoken extensively or repeatedly about the unemployment figures, and I don't want to go back to that. But let's even look at what we need to do to improve the employment level in the country. Starting from the agriculture sector that accounts for about 28% of the GDP and also accounts for the highest number of employed people in the country. We need to address the issue of insecurity so that farmers can go back to their farms. Instead of living in IDP camps, internally displaced persons camp, they should go back to the farms. Secondly, we need to address the productivity of the economy by improving on basic infrastructure supply, particularly energy supply. If we have stable power supply, that will significantly bring down the cost of production in the country and will encourage businesses to set up production outlets in the country and tap into the large population of the country. So we need to address that. We need to address the issue of logistics supply, issues around the seaport and the ease of bringing in goods into the country, the ease of exporting goods out of the country. We need to address that. We need to address the issue of others supporting transport infrastructure, the rail lines, the roads. We need to, then you have to look at the issue of policies. We need to create policy that incentivize sectors of the economy that way we have competitive advantage. Starting from agriculture, we should look at how do we encourage value addition in agricultural products. So where you have small businesses that are converting for example, cassava. Cassava can actually be turned into several industrial goods, including starch, and we produce a lot of. So what do we need to do to encourage people to go into some form of value addition from agricultural input materials? So I think those are the things we need to do to address the issue of unemployment. So let's focus on the small and medium-scale enterprises, encourage them to expand and employ one additional person or two additional persons, and we will kill this issue of unemployment in the country.
Mr. Chukwu, let's go back to inflation, and I want to take it from the monetary policy forum that was held by the Central Bank of Nigeria just a few days ago. The Central Bank of Nigeria is of the view that disinflation has set in. Do you support that optimism by the Central Bank of Nigeria, as well as the MPC meeting this week? What are your expectations? January MPC meeting delayed till now. I just hope it's not also a tradition, you know, because even last year, I think it was like that. So CBN, I think, needs to do better. This is my clarion call to them. They need to do better on that. This is from me to them, because this delay, I think, is also statutory. 6 times a year: January, March, May, July, September, and November. Those are the meeting times. I don't know. Anyway, Chief Chukwu, go ahead.
Well, what we need to do is to address some of the fundamental issues around inflation. But in terms of this deflation, disinflation, not because deflation is a completely different thing, which means prices are dropping.
Yeah.
But disinflation is that we are seeing increase in prices at a rate lower than it was the preceding year. And that happens for multiple reasons, which one of them is very apparent now. So if the central bank says we should expect disinflation in a setting, it wouldn't be out of place. The reason is that we are not talking of base effect. The base effect would have set in. And that base effect that you are building from a higher base. And Nancy, I always use this as a simple example. If today, if you started, if in January last year, for instance, the price of a commodity was 200 naira, and it was an increase from about 150 naira. It was an increase from 100 naira. So you're talking about 100% inflation rate. If it was an increase from 150 naira, you're talking about 33% inflation rate. So by January last year, if the figure was the price of that commodity was 150 naira in January 2023, by January 2024, and it got to 200 naira, it was a 30% inflation rate. But what increased was 50 naira over 150 naira. Then now, if you have another 50 naira increase between January last year, 2024, and January 2025, you are going to be talking, that commodity item will now be selling for 250 naira. But for inflationary purpose measurements, the increase is only 25%. So you can actually tell you that last year, January inflation was 33% or 33.3%. January inflation this year is only 25% because you are measuring from a higher base. The base in 2021, 2024 was measured from 150 naira to 200 naira. Now your new base is 200 naira and you're measuring to 250 naira. So you're saying 50 naira over 200 naira, it gives you 25%. When it was 50 naira over 150 naira, it was giving 33.3%. So you can see that if you talk of disinflation, you will say inflation rate in January 2025 had dropped from 33% that it was in 2024 to 25% in 2025. But it does not mean that prices have gone down. You are actually going to bear additional cost of 50 naira to buy that product you were buying 200 naira last year. So anybody, economic time will say disinflation, but we need to recognize that disinflation does not mean reduction in prices. It only means that in proportion to what it was the previous year when there was increase, the current increase is lower in proportion to the previous year's increase.
So with this, your analysis, it justifies the food prices, a few food prices falling right now. I saw on X, was it over the weekend, you know, a few pundits of the government, people that are supporting the government, tweeting and saying, oh, okay, food prices are falling, oh, this and that. And when I was looking at it, I was just smiling. A bag of rice now, 90,000 from what it was, 150 or 110 or whatever it is. So what you have just explained justifies that, which I also thought about over the weekend, talking about the disinflation. The question, I think, on the minds of Nigerians right now is that take us to where we were before, isn't it? That will be seen as victory. Take us to where we were before. There was a time we were buying a bag of rice in this country for 8,000. Oh, good old days. Now, does that also, that takes me, okay, what What's your MPC? Before I go over to what I want to say, you've not answered your MPC prediction, or did you? Are you dodging it by with style?
No, you not even ask that. You have that in mind because you know I'm spiritually inclined. I have answered the questions you had in mind before, so you are assuming that I've got to your mind again to extract this.
So talk to me about MPC. What are your expectations very quickly while I ask my next question?
Okay, I think the logical thing is that they will hold rates at the current levels. Like I said, there are too
They
many.
will hold. They've always been disappointing you guys. Oh.
Yes,
When
yes,
you
but
people say hold, they've always been disappointing, and they've raised
no,
rates by
Nancy,
8.75% since Cardoso came
what we
in.
do, we'll build the logic of our own prediction.
Una
The
logic no
logic
dey
of my
work.
prediction. The logic of my prediction is very simple. The global macroeconomic environment is in a state of huge uncertainty. Crude prices have dropped to about $34 per barrel. We are seeing the U.S. Policy environment in a very fast motion. So these will all have effect on global trade, global prices, and so you don't have those fine details to take a judgment call, to make a decision. Secondly, you have been expecting the MBS to publish the GDP figures, to publish the revised inflation figures. Those figures have not come out. You can only deal with a few variables. Well, you can say to some extent Naira has strengthened or the pressure has abated, but I had also mentioned to you that that could partly be as a result of the lunar holidays in China. So you may witness a fresh pressure in FX demand. So that's factor. So the factor that they need to make a judgment call are mostly not there. And if I were them, the right thing is to pull back and hold while we watch development in this item subjects I've mentioned. And then at the next meeting, we can take a definitive decision.
Okay. The other question is around what I was saying earlier, that Nigerians want President Tinubu to take us back to where we were. But let me also act as the devil's advocate for President Tinubu and his officials. They will say, okay, Nancy, where we were was cosmetic. It was being driven by a lot of artificials, petrol subsidy and all of that, which the government couldn't afford. So this is where we should be, you know. But does that also justify what the IMF has come out to say, that our GDP per capita has reduced drastically in 10 years from about $3,022 to about $839 it is right now? That is the first question. The second question is, because I'm looking at my time, the second question is that, Mr. Chukwu, there are tariffs everywhere, increases everywhere. If it's not telcos, it is custom FOB, which they've reduced now. It is a 15% by the ports. It is ATM charges by the banks. It is one way or the other, directly or indirectly, Nigerians are paying more for stuff when the country is hard. How do we justify that? Then thirdly, I think I need also to put this in, the Trump tariff wars that are ongoing. Do you think that officials are a bit sensitive to the surprises, even though they may not be surprises, the surprises that may come, fiscal surprises, even in the United States, let me put it that way, and how sensitive is our government to Nigeria's, to the woes of Nigerians right now? So, shoot.
Okay, first of all, it's nearly impossible for us to go back to where we're coming from, because inflation is part of life, change in price levels is part of life, and hardly no way in the world have prices gone back to where they were a couple of years back. You could have some level of reversals. For us to be where we were when the president took over, I mean, Mr. Tinubu took over as president of the country, or Asiwaju Tinubu, as you prefer to call him, you need to go back to an exchange rate in the region of 750 naira to $1. Can we go back to that exchange rate in a liberalized FX market without a significant improvement in our crude oil production? If we begin to produce about 3 million barrels a day, probably we could go back to that. But do we have that capacity to produce 3 million barrels a day? For now, it's a question for all of us to ponder. Okay. So going back to that era, because the truth is, if you go back to an exchange rate of 750 naira, you go back to a pump price in the region of 500 naira, 580 naira per liter. But can we go back to that? In fact, the reality is that before you took about 200 something naira to a liter. So maybe you are talking of going back to an exchange rate in the region of 430 naira to a dollar. So that's one factor that is difficult to achieve. So anybody who is hoping that we'll go back to that, I recommend the person should go and read Who Moved My Cheese. If you have not read that, Who Moved My Cheese, please go and read it so that you know that the cheese is gone and gone forever. Back to the second aspect of your question, I would first take the question on are we sensitive to Trump's policy environment? I think to some extent, we seem not to be weighing fully the implications of a Trump presidency. I have said repeatedly at different fora that we should expect a very nationalistic global economy where countries are going to dig in and want to be self-sufficient in production of almost everything because of Trump. We're going to see diversion from economic investment to military investment as countries try to protect themselves. The European Union is going to fall back, given the threat that US is making on the need for them to further fund NATO. And they will just go back and begin to build their armament to protect themselves, not relying on the US. So you're going to see ordinarily an increase in the cost of goods and services globally as countries retract into their shell and become more nationalistic. And the global trade would be, they see a global decline in global trade. I had alluded to the fact that it's most likely they're going to see an uptick in inflation rate, which could lead, interest rate, which could lead to an outflow of capital back to Western countries. And then you also have to bear in mind that Trump's policy on crude oil production, his non-recognition of ozone layer depletion will mean that he's going to support further investment in fossil fuel extraction through hydraulic fracturing in the U.S. and further increase U.S. crude production. U.S. is already the largest crude producer in the world. And he has also said he's going to put pressure on Saudi Arabia. And Saudi is a swing crude producer in the world to increase crude production. We should see crude prices decline. At the same time, we are seeing government increasing budgeted expenditure to about 40 trillion naira and to about 54.9 trillion naira, almost 55 trillion naira, and the expenditure above 40 trillion, which for me, does not add up.
Okay, Chief Chukwu, I think we'll leave it at this point now. Let's anchor here. Let's talk again sometime soon. The MPC meeting this week, let me see if your predictions will hold water. We have questions coming in for you from our viewers, but I'll send them to you after the show so you can respond to them. Thank you very much for joining us on today's edition of the program. All right, I've been speaking with Johnson Chukwu, who is the Group Managing Director of Cowry Assets Management, and we've been looking at economic policies in the country and their impact. Please join me again tomorrow, same time on this station. Moneyline with Nancy. It is be the best you can be and be that change that you want to see. I am Nancy Naji. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.